Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, October 12th, 2010. Now let's take a look at what's going on in this market, folks. We did have some volatility early in the morning session here. Again, the market's having a small gap down as a result of the dollar slightly stronger and some Asian selling. In addition, we are waiting on the Fed or FOMC minutes today at 2 p.m. Eastern Time. Those minutes will directly influence the dollar's activity, which we all know by now, or everyone should know by now that has watched my videos, that will influence the markets in a dramatic way. So again, look for a move on the dollar at 2 o'clock based off what the Federal Reserve says. And again, everyone's listening to see about QE2, quantitative easing number 2 here. And again, they've been kind of doing it already by fluctuating the dollar and keeping the dollar down, but nonetheless, they're still talking about this QE2 out there, and the market again has moved up in anticipation of QE2. So in a way, it's almost been priced in. It's just a matter of what they're going to give. We want to see if we get any insight into that in today's meeting minutes announcement. All right, next. Spiders right now are down 28 cents. Dow is down 39 points. NASDAQ is actually up on the day 3.5 points. S&P 500 down 2 points on the day. Gold is lower. Oil is lower. Why are those two lower? Well, it seems like a little bit of profit taking coming in. If we move to the dollar, you can see the dollar again had an early push up and then just cascaded down. This has been a normal occurrence for the dollar. Yesterday we had an up day, but that was a rare up day. The dollar every other day has had a little bit of a move up usually and then just been pounded down. Today is no different. Why do you think the markets, if you look on the SPY chart, why did the markets rebound here basically to the flat line and just hover here? There's an exact reason you have to understand here, and that would be the dollar. UUP, take a look. The dollar initially pushes up. What does that do to the markets? It crushed the markets early. Absolutely crushed them. What ended up happening here, folks? All of a sudden, a mysterious, and I'm kind of saying that with sarcasm in my voice, mysterious force comes out, pushes the dollar down. I wonder who that could be. Federal Reserve, cough, cough. As the dollar falls, the markets are rescued from their dramatic drop early. You can see the massive buying that comes in. The markets get lifted up. Remember, always remember this. The markets will move inverse to the dollar at this point in time. They have for years now. And again, until the dollar gets very, very weak, and we'll watch for that. When the dollar gets to a certain point, let's say down on the UUP, maybe to 20 or 19 or 18, then you'll have that disconnect happen. But until then, the markets seem to want to move inverse to the dollar, and we did see that again today. Markets are coming back in a little bit. It does look like a little bit of profit taking. What I brought up before is gold and oil are down as well as metal stocks. If you take a look at U.S. Steel today, U.S. Steel, look at this, near the lows of the day, down $1.15. So why is, if the dollar is down a penny on the day, or at least the UUP is down a penny, flat to slightly negative, why are oil stocks, why is oil down, why is gold down? The answer to that is you are having some smart money taking profits ahead of the FOMC minutes today at 2 o'clock. That's really all it is, folks. Otherwise, gold would be flat. Gold is just down slightly. If I go to the GLD chart, you can clearly see here, not a big fall. I mean, you're not even erasing what we gained yesterday. You're essentially right back in check with that. And if you go to your daily chart on gold, you can see we've been hovering up inside of this big red reversal candle, which again, believe it or not, is a slightly bearish signal for gold in the short term, as long as it doesn't take out this pivot top. So again, just recognize that, understand what it means. In addition, USO is basically flat on the day here. You have oil slightly down, as I mentioned before, but the USO again, which factors in from a 4 o'clock close when oil closes at 2:30. Again, you can see hovering in a sideways manner. Also has a big reversal candle in here. To me, that's bearish until we break above this pivot top on the daily chart. So watch that very closely. Understand the pattern formation here. And again, folks, each and every one of you should be joining the Research Center if you're not already a member. And by the way, webinar this weekend, the In the Money Stocks proprietary methodology webinar is this weekend. That's where we talk about all our key counting systems, all our key look and pattern recognition techniques that we utilize to make money day after day in this market and make the calls that we make. All right? So you want to be involved on that. Go to the In the Money Stocks homepage, and under Education Seminars and Webinars, you will see that, and you can sign up. All right, next up, let's go back to the SPY. Again, folks, the most amazing thing about this, you can see pretty clearly here, you have a little bit of a gap down today. Notice the gap down takes you below or down into yesterday's lows, but below the blue line. That signals continuation. You get right to the 200. You get a small bounce there. You can see the next tail goes right up to there. At that point, you flush through it. You come just about down into this area. Please note this. See this little bit of a tail area right here? If you take the closing low and just extend it over, you pierce that tail. And this is really the support area anywhere between these two levels. You have the lower level and you have the closing base right there. You have the tail low and the closing. Whenever you deal with resistance supports, always recognize that a tail will be a resistance or support level, as well as the closing pivot point on the body of that candle. So you want to utilize that in the correct way. All right, again, these are just little tidbits that I give. In the Research Center, I teach you way more as well, folks. But again, the webinar is the ultimate. That's the ultimate learning environment you want to be involved in. All right, here's your chart of the zoomed out picture of the SPY. You can see going back about 5-6 days here. We had that nice little sell, then the reversal to the upside. And then the markets have kind of just gone sideways to up until the late day fall yesterday and then continuing today. And they saved it again based on the dollar dropping. So watch that again very, very closely. If we go to the 60-minute chart, you can still see you're still hovering up here. One thing I noted to my subscribers last night is this trend line down here. If you draw it right up underneath, you can see from these pivot lows to the lows right here and right through this area, you did break this, and this is a little bit of a breakdown, although nothing significant yet. You don't really want to go out on a limb until we see what the Federal Reserve says. Also, folks, let's not forget the earnings announcements that will be coming in the coming days. Just today after the close. What is today? Intel. Intel will be reporting earnings today. Let me zoom in. You can clearly see here, very, very clear, that the Intel chart right now is trading slightly to the upside intraday. If we go to the daily chart, it's had a nice move off the lows, but nothing significant. You can see on Intel, nice drop here, and then you have a bear flag. Believe it or not, this is a larger bear flag. I just don't know if it's up enough before it's going to fall. For me, going into earnings on Intel, I have to be in a neutral setting on that stock specifically with no bias. Yes, it's rallied off the lows, which means it's factored in decent earnings, but again, the whole market has as well, so that would also be factored in. So if Intel can come out with a decent earnings report, you would in general think that the stock would at least hold flat. If they miss by any means, though, the stock could be going down to a double bottom down here very easily. I don't think they'll miss. I'd be surprised if they miss. If anything, I think they beat by a little bit, but it's all about the margins, folks. The margins and the revenue guidance and the guidance going forward that you want to pay attention to. Again, we will be watching that after hours here at In the Money Stocks, and I will cover everything in the nightly video afterwards when I do the video after the market closes. All right? Tomorrow morning, JP Morgan reports earnings, folks. JPM reports earnings. Here's your chart on their daily of JPM. You can see it had a great rally, great pullback. Now it's rallying up, consolidating into earnings. You have resistance up here at $41.35. You have a little bit of support down here at around $38. If you break that, you're going to go down to about $36.75 and then ultimately double bottom at $35.50. On the way up, if you continue up and if you take out this the 41.35 area, you really have a good chance of making a move probably upwards of the 42.75 to 43 level before you hit some resistance, and then ultimately all the way to 44 could be next. We'll watch that very closely again towards the end of today and into tomorrow morning's earnings report by JPM. And again, folks, we're in the heat of the storm now. I mean, this is it, the eye of the storm, the hardcore stuff going on now. Earnings coming out. This is options next week as well. We got Fed minutes today. You want to be in that research center because of the alerts that are sent out. You want to have the hot charts and alerts, pro trader watch list, nightly videos of 30-40 minutes in length, as well as daily market reports with every key level put out on the markets, on oil, on the dollar, on the bonds, 10-year, and so forth. That's where it's at, folks, bottom line. All right, now, enough said in that respect. Last thing, I want to just go back to the SPY. Let's just take a look. The general synopsis for the rest of the day. Right here, folks, you can see basically by 10:30, the markets are going sideways now. Lower end of the sideways range, but between two major levels that were on my charts via yesterday. For those of you that are in the Research Center, you can look back via the charts. Even on the intraday, folks, these levels were here yesterday as well. So you can see how accurate they work. But the market now just hovering between these two levels, and that's expected to stay and maintain itself until 2 o'clock, at which point you do expect a little bit of a move as the dollar will adjust itself accordingly to what the Federal Reserve says. Have a great rest of the day, folks. Join the Research Center now. Let's start making some money. Take care.